Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com.
Welcome back, everyone, to Real Estate 360 Live. I'm your host, Ryan Sloper, joined today by my guest, Louis Cammarosano, the general manager of HomeGain. Quick reminder, the show is dedicated and designed to build the Washington, D.C. Metro's housing and credit markets one house at a time. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is 877-245-2030. That's 877-245-2030. Or via the web at realestate360live.com. When you visit there, on the right-hand side, there's an Ask a Question button. Just click on that, and I'd be glad to get back to you guys via email, within the next 24 hours with any questions or concerns you guys may have. We're going to get back into this week's market movers, things that can, make interest rates sway one way or the other. This segment was brought to you by HomeGain. HomeGain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. All you have to do is go to homegain.com today to see what I'm talking about. If you type in your home address, you'll get an instant free estimate of your home's value online. It's a great way to monitor your home's value, and it's totally free. Check that out today at homegain.com. So this week, as far as there's no big reports out today anyway, other than the Spanish fears of default that are driving the stock market to get weaker, down, like I said earlier, about 200-plus points on the Dow. We have crude oil, which is making a run higher as the situation with Iran is worsening. Obviously, I kind of expected, Louis, you and I had talked earlier, maybe a couple months ago, that I thought that, heading into the election, that I felt like oil prices were going to head down, gas prices would come down a little bit, just because they don't want, a negative light going into the election, that they're skyrocketing, because that's not going to do any good for the president. Did you not agree with me on that?
Yeah, we mentioned that also, that what a president can't get reelected if the economy is worsening.
Right.
They can get reelected if the economy is bad, as Franklin Roosevelt did a few times, but not if it's worsening. So if oil prices are rising, that's not good. But if they look like they're falling, then that's positive for the president.
Right. It's shown, just a better positive consumer sentiment heading into the elections, at least. And also this week we get the June new home sales, June pending home sales, and the first look at the quarter two GDP and June durable good orders, and, of course, weekly jobless claims. Louis, you had sent me an interesting article, and I'll let you kind of describe to our listeners of, I believe it was it in Reuters, I believe, was the one that sent the job report from last week?
Yeah, it's whatever Yahoo covers when they first released the job report.
Yeah, I think it was on it was the jobless claims and factory workers, and you had said, I think you had tried to send me the article initially, and by the time I went to look at it, they had already changed it.
Yeah, they made the initial argument, or the reporting of the new jobless claims as being a rebound from the jobless claims that had been lower the week before. But then they put this kind of spin on it, that the amount of jobless claims that had been reported last week from the week before were more consistent with modest job recovery, which is really not true. It's really consistent with no job recovery.
Right.
And so anyway, the link that I had sent you had a fairly sanguine headline, and when you use that link, that story changed about 3 times during the day, and it got progressively worse and more realistic as to what had actually happened. I just found it odd that the initial way they tried to spin the increase in jobless claims is somehow was good news and consistent with a modest job recovery when it really isn't.
Yeah, and I think, it brings us to another interesting point that we kind of talk about week in and week out. And when you start looking at these national headlines, it seems like they're always trying to put a positive spin on everything. And the fact of the matter is, this employment situation is getting worse. It's not getting better. And I don't care. These numbers can be good one week, bad another. At the end of the day, there's really nothing that's going to spur any sort of economic growth. I do.
Think about right. 380,000 people apply each week.
Right.
And somehow it's better when it's 370.
Yeah. I mean, really? 10,000 is going to makes a big difference there?
That's fewer people applying
Right.
Also, what happened in the 4th of July, I'm sure people didn't apply because they were busy barbecuing. They figured they can apply next week.
Right. Yeah, I mean, and it's, obviously this is a big deal when it comes to the overall real estate market nationally with the national unemployment rate being pretty bad. Locally, like we talk about week in and week out, that all real estate markets are local and they're hyper local. So here in the D.C. metro area, we obviously we have an anomaly from the rest of the country pretty much because, there's a lot of jobs, there's a lot of government contractors, there's a lot of military. It's a very transit area, people moving in and out. So we do have a much better employment situation than the rest of the country.
Excuse me, Ryan, do you also have what people they tend to underestimate, but in some areas, foreign buyers are very heavily involved in the local market?
Yes, I would wholeheartedly agree with that as well, because since we are in a pretty transient area, it's investors do come out all day long to try to buy up investment properties because they know that they're good buy and hold situations because they're going to be able to get renters in there and have positive cash flow. So we will get a lot of that actually, and I mean, all you have to do is go up to the courthouse steps, one of the foreclosure auctions, and see the amount of people that are standing out there. A lot of
foreigners aren't subject to the employment issues that Americans are.
Absolutely. And not only that, I mean, a lot of them just have tons and tons of cash on hand. And like we said before, I mean, and not recently, but before, 6 months to a year ago, the strength of a lot of other currencies, foreign currencies in relation to the dollar, you could buy a lot more for your money when you coming over here from somewhere else. So
although the dollar has strengthened.
It has strengthened over the last 3 or 4 months, I'd say, dramatically from where it was.
Right,
so
because of the European issue.
Yeah, and so we're still seeing a pretty good foreign participation, especially in the D.C. metro area. There is a lot of cash transactions still taking place, which I think is a good indication of investor money. When they're able to get yields of over 10%, it's a great find. And for people that obviously don't have all that cash on hand, but do have maybe the ability to buy a second home or an investment property, I strongly urge you to consider looking into buying real estate, just because if you can get a loan at these ridiculously low interest rates and be able to diversify your portfolio per se, to be able to buy another real estate, whether it's near the beach or whether it's in your hometown somewhere where you can manage the property or hire a property management company to do it for you, you're looking at pretty solid returns and you're locking in your cost for over a 30-year period. So you might only be required to put down 20 or 25%. Obviously, I say this because from one person to the next, there's different qualifications. But at the end of the day, you have to reach out to professionals that can at least look at your situation. And maybe you can't buy this year, but maybe it's a year or two. I would still highly suggest you try to move towards doing something as quickly as possible, because as I say every week, rates tend to come down very slowly and shoot up like a rocket. Now, granted, this hasn't been the case for the last year and a half, 2 years, because they're being artificially manipulated. But at some point, this has to turn. Look no further than Spain, as we discussed earlier. Their 10-year yield is at 7% because that's where the investors feel like it's worth the risk. Well, at some point, when China and everybody else realizes that this debt is not sustainable, and they start to pull their money out and start not to buy our bonds, who's going to buy them? The Fed? Are they going to buy 100% of them? I know they're vested in our debt at a 60. I want to say it was probably like a 60% clip right now. They're going to have to buy all of it if the foreign participants come out of that market.
Well, that'll really cause inflation, because where are they going to get the money to buy them?
Exactly. That is, and that's my biggest fear, is that at some point that could happen. Now, is that going to be next year? I don't know. Is it going to be 2 years, 3 years, 4 years? I don't know. This could get extended out for the next 10 years. But inevitably, when that inflation does rear its ugly head, it's going to be bad for everyone.
Well, you see it in the smaller countries that resort to the printing press. They hit Zimbabwe has $200 and $300 trillion notes. It's happening with hyperinflation in smaller countries. The advantage the U.S. has is not only the printing press, but because it's the reserve currency, they can export that inflation by sending those dollars all over the world instead of just flood them into the local economy, which is the United States, which is already extremely large.
Yeah.
That's the main reason why you haven't had hyperinflation, because of the scale and the size and the demand for dollars and dollar-denominated assets.
Yeah, and I'm.
But there is a limit. There's a limit to anything. It's not too big supposedly to fail. I mean, there is a point where you print too much and there's too many dollars in circulation, and it devalues the entire value of all dollars in circulation.
Yeah, and I think a lot of it has to do too, Louis, is that there's so much limelight on what's going over in the Eurozone right now that nobody is going to focus on the United States. So it's it could be a couple.
But think about it, Ryan. Spain has had this problem for years.
Right.
It was only masked by the fact that they were in the euro and that somehow there was a perceived safety of being in the euro. And now when they're realizing that in order for Spain to pay it back, their debts, they can't pay them back. They have to rely on that European Central Bank, which is not as well equipped to pay back by printing money. They have to resort to an outright bailout. That's when people start to realize, wait a minute, Spain never was that good of a credit risk.
Not at all. And now
that'll happen in the United States. They'll say, why are we accepting 1%?
Yeah, I mean, 1% is just absurd. I mean, it's especially considering
the risk.
For the
you're going to get paid back in inflated dollars because they're going to have to print up the difference to pay, because even if they raise taxes to 100% on everybody in the country, you probably wouldn't be able to pay back our current deficit plus the unfunded liability.
Yeah, I think they actually did a study on that. That is definitely the case. So it's not a situation that we want to be in. And, we've got this all on the heels. We still have, the calendar's ticking as far as, the focus that we got to go back to Congress and what they're going to do as far as extending the Bush tax cuts that are set to expire at the end of the year, as well as the Social Security withholding cuts. I mean, what's going to happen there? And, how is that going to affect everyone? I believe that more than likely they're going to extend these cuts, and I just don't really see a way around it, because I definitely don't think that we're going to be able to just start cutting across the board. Would you agree with that, Louis?
They would, but they're saying that they all want to extend the cuts, except the discrepancy is between the Congress who wants to extend the cuts for everyone and Obama wants to not extend the cuts to the so-called wealthiest 1 or 2%. So will he veto a bill that has a full tax cut? Who knows?
Right. We're coming up on a break, guys. When we come back, we're going to get into the benefits of a short sale versus a foreclosure from the seller's perspective when we come back. Stay right there.